The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And our stock of the day is Rio Tinto. This coming after it posted a lower than expected rise in iron ore shipments for the second quarter, but forecast FY25 copper production at the higher end of its range. Rio shipped almost 80 million metric tons of iron ore from its Pilbara operations in the 3 months to June, up 13% from the March quarter, but below expectations as production recovers from a series of tropical cyclones. Rio has reaffirmed its full-year iron ore shipments at the lower end of its guided range. And just checking in on the share price, coming under pressure today, down by 0.4%. I think it's worthwhile mentioning as well that Rio Tinto has also announced its CEO, a new CEO, I should say, and that will be Simon Trott. That's current chief of the iron ore division. Let's get a view from my expert guests, Thomas Atkinson from FX Evolution to start, and we have David Novac from Wealthwise Education. Thomas, we had your chart up on screen. Tell us what you think about Rio Tinto on the technicals.
Yeah, I don't mind Rio. I think the whole iron ore sector actually looks really good, and obviously Rio is made up of more than just the iron ore parts. We've got the aluminium and of course the copper and then other minerals and metals. So the cool thing about this is the whole sector is obviously finding some buying, but the iron ore component has been slower to pick off. So for audience members out there, the big thing you're going to need to be watching is the spot iron ore price on the daily and seeing whether that's actually starting to pick up in terms of trend. Whether it's Rio, whether it's BHP, whether it's FMG, especially the FMG chart actually, a lot of them have been basing. And what I've highlighted here for the audience is with the red arrow is this take of the low recently. So around 105, we broke below that. And a lot of technical analysts and a lot of even fundamental guys will have had stop losses underneath that level. So as the market broke down, it's then quickly rejected and created what we call an engulfing candle. And this is a good sign because when you get a nice strong rejection from taking out a low, that often means that the market, something has changed, something has kind of flipped the switch. And with the announcement, of course, the new CEO and other things that are happening, there's news coming in around this. Copper obviously spiked the other day, tariffs and other things, but just generally there's a groundswell throughout from going from precious metals to more of these hard metals. And I'm seeing good signs on the charts. What I've got highlighted here as well is the most traded zone, which is at 117 for Rio. And that, funnily enough, also marks the 12-month target. I think the 12-month target for most of the people that cover Rio, of course, there are many, they've got it about $118. So currently trading at 110-ish. It's technically cheaper than their 12-month target. Funnily enough, their 12-month target is on the level they've transacted the most on in the last 2 years. And it's trading right on its 5-year forward average. So I wouldn't say it's overpriced. I wouldn't say it's underpriced. But if iron ore starts to pick up, well, we know that these miners can often move pretty quickly. So I like it. It's a buy.
We've got a buy for our stock of the day, Rio Tinto from FX Evolution. Let's go to my guest here in studio, David Novac, Wealthwise Education. Buy, hold, sell.
This is a double buy.
Wow.
Yeah. Look, I agree with Thomas on this one. There's a couple of things. I really like the fundamentals of Rio. The dividend yield, is fantastic. It's just under 6% fully franked. 9 times earnings multiple. The numbers here, the 6 months to December were fantastic, the earnings per share growth. Even where the iron ore price is on the Aussie dollar, 65, and with their record production numbers they released today, it ticks every box from a fundamentals. And now the technicals itself are not strong right now. It's in a really wide sideways pattern. I just looked at the weekly chart and it's trading between $102 and $121, Rio. Sorry, I haven't got a chart to show you.
That's okay.
But it's really in a nice sideways. It's bang smack in the middle of that pattern right now, around 110 or just below today. I'm bullish on this. If it breaks 113, if it closes, not just breaks, but closes above 113 and there's some buying behind it, this can go back to the highs at around 120, 121. I would not be bearish on Rio here. And the other thing is with the GDP numbers that came out yesterday, that were reported by China. I wouldn't be surprised if they added more stimulus in the second half, especially in the property sector. And the retail sector hasn't been strong. It's more about the industrial sector. But their GDP numbers surprised everybody. With iron ore around $100, Rio, BHP, Fortescue, they're all of them, I agree with what Thomas said, look to me like they're forming a base here and ready to rock and roll. So I would, I would be buying this. I think that when they report next month their annual results, you'll be surprised. I'm a buyer of this, and you can see it on the technicals, although like I said, right now it's not strongly bullish, as you can see on that chart, but it breaks and closes above 113. That's, to me, you'd add to that position.
Got it. That is our stock of the day, Rio Tinto, a double buy from both of our guests. Stay with us. More news and views to come.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.